The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Foundation podcast with Alasdair Macleod, keeping you up to date with expert opinion on precious metals and the markets.
Hello, this is Alasdair Macleod on behalf of the Gold Money Foundation. Today, on the line from Toronto, I have David Quintieri, who recently published a book, The Money GPS, Guiding You Through an Uncertain Economy. The book provides an introduction to economics. It goes into the origins of money, the booms and busts of the past, and takes us right up to today's financial crisis. It goes into making money, concentrating on 4 different types of assets: paper assets, such as bonds and other securities, commodities and precious metals, real estate, and David also gives some advice about going into business. David has a website, themoneygps.com, where you can get a shortened version of this book for free, or indeed you can buy the whole book. Welcome to you, David.
All right, thank you for having me on. I appreciate this.
Well, thank you for joining me. Can I first ask you, what prompted you to write the book, and who are your target audience?
Well, I started by reading a bunch of finance books, and I really got into the Austrian economics. And what that taught me was that the governments have put themselves into a corner. They brought the interest rates all the way down, and they seem to only have one source of one possible outcome, and that is to print money, creating inflation. So essentially what I did was I took my notes that I was creating and I made a book out of it. And I hope that people will realize how fragile our system really is. So my target audience is really someone who isn't deep into the financial field. So it's a beginner's book. And you get to learn what's going on behind the scenes. So those who want to know more deeply into what's going on, not necessarily what the newspapers are telling you, that's who it's good for. And it's also good for people who want to take more control over their finances.
Well, that's interesting. Tell us a little bit about your background. Have you found in your experience that people want to take more control over their finances? Is this, if you like, a professional view?
Yeah, I definitely think that people are getting concerned with inflation picking up, and their mutual funds and RSPs and that sort of thing aren't really keeping up. And I believe that they do want to take more control over their money. And something like this book gets the beginner some knowledge, and then he can take that and go on from there. You don't have to necessarily rely on a financial planner to take all your savings and hope for the best here. This is about empowering the people.
Right. And so you're teaching them a bit about Austrian economics. Do you find that's a fairly easy process? Is it intuitive for people, or do you find you have to break down, if you like, the preconceived ideas from Keynes and the neoclassicists?
I don't think to really understand Austrian, you don't need to really get into the complexity of the financial system. I think it's the easiest to understand, and I think that's what really got me into it, was if you bring interest rates all the way down to zero, you're distorting the market. And this causes severe imbalances, and it also results in such violent booms and busts.
Yes, and and worse than that, it's destroying savings at a rapid pace, isn't it? Yeah. Sorry, I interrupted.
No, it is destroying savings, and people are forced to invest in the stock market to try and get some returns. And I believe that's part of that's partly intentional. The governments want to force you into the stock market so we can continue to prop it up.
Yes, I have no doubt that there's a vested interest in trying to keep asset prices up generally because of the importance of assets to bank balance sheets. David, how do you see the global economic outlook at the moment, and how does this affect your view on asset allocation?
Okay, well, I do see the volatility continuing to persist for the foreseeable future. I don't see an end to this anytime soon. We're going to be trading in a range here for as far as the eye can see. If we do make new highs, I don't think it'll be anything dramatic. We may see lows we haven't seen for a while. But if it gets too low, I do see the Fed stepping in for a third round of quantitative easing. However, that will bring in more inflation, of course, but they'll say that the inflation isn't there. And also, I do want to make note that for the last, over a decade now, the stock market has been pretty much at the same level here. So if you don't even factor in for inflation, we're still 10, 12 years behind.
Yes, indeed. I don't know very much about dividend yields and so on in Canada, where you are. But are dividends an important part of the investment returns in the Canadian markets, or like America, have they almost been sort of foregone by investors and companies?
Yeah, I don't think you're going to get the best dividends or what you would hope for. I mean, I know the big banks do give out a reasonable dividend, but it's you can get. I think you're forced to sort of hope for capital appreciation, and that's not a good sign, because dividends are very important, and that's part of my whole passive income philosophy from my book, The Money GPS. It's about accumulating wealth over time.
Yes, I certainly picked that up from your book, that you do place a very strong emphasis on cash flow, if you like, from your investments. And, that certainly is something you go into in some detail on how you recommend you run a property portfolio, and also the importance of cash flow in businesses. But coming back a little bit, you said that the banks in North America pay good dividends. Do you feel that the dividends are secure there, or do you think the banks might come under greater pressure to retain earnings so that they build their capital bases more effectively?
Yeah, that definitely could happen. If we see a big crisis coming up, they could stop those dividends at any moment. It's important to look historically. If they've been giving a dividend for 20 years, you would hope they would continue it. So it's always a risk. But there's not too much we can look forward to there, because I do see a big crisis happening in the near future.
Right. So so in a sense, the dividends aren't going to compensate you for the risk of holding bank stock. Have I got this right?
Yes, that's what I'm trying to get at. Yes.
Yeah, absolutely. Okay. And sort of moving on a little bit, how do you see the outlook for gold and silver, and how does that fit in with your investment philosophy?
Well, I'm glad you asked that. Gold and silver, I believe, will be the best asset to hold for the foreseeable future. We are heading into a time of big danger, and gold and silver have historically been the safest assets to hold. I like the physical bullion specifically, because it is real. If you own a stock, I consider it a derivative. So it's not truly holding that physical metal. And although you can get big returns on mining stocks, for example, I think we need the security and the safety. So at least a large portion of the physical assets should be inside of gold and silver. Right.
But the mining stocks, obviously they're a very important part of the investment scene in Canada. And I think gold stocks, as James Turk recently pointed out, are at 30-year lows relative to bullion prices. But against that, you do, I suppose, in this global mining industry have, if you like, political risks. And changing sectors slightly, I saw that, or we saw that the Argentinians are nationalizing a Spanish energy company, and that must surely worry people who are holding interests in gold and silver mines in Latin America and elsewhere. Do you think this is a big factor in the market, and do you think that it justifies such a great discount on gold and silver mines?
Yeah, I think it could be because, like I said before, we're getting at this point where it's really uncertain. The future is really uncertain, and the last thing we need is uncertainty in where our investments are going. So if we are to nationalize more mines, the mining stocks are going to suffer because of that. Investors will have less places to invest. That's why I really put the emphasis on the physical, because you hold it. It's yours.
Yes. I suppose the other thing about mines is that they do give you gearing, but perhaps if you have a reasonable portfolio of mines, then that spreads the risk a bit.
Yeah, and I of course I do suggest that never put all of your investments into one thing ever. Even gold and silver is not bulletproof.
Right. No, that's true. Would you, in terms of thinking of bullion, would you look at bullion substitutes such as ETFs or the Sprott Silver Fund, for example? What's your view on that investment route?
I am definitely a physical metals person. I believe you should physically have the metals in your hands. However, as a good secondary, I do believe that the ETFs are reasonable. But again, it's not physical. Like my whole philosophy is right now in such a dangerous time, we need the gold and silver, land, other real assets.
Right. Changing the tack a little bit, we've seen the derivatives markets really grow very, very rapidly in the last 10 years. And particularly over-the-counter derivatives, things like credit default swaps and so on. Do you have a view on the derivatives markets? Is this something that you watch and worry about?
Yes, this is my biggest concern overall. There's no doubt. In my book, I quote it here, but it's the Bank of International Settlements. They said that in 2011 there were 1.5 quadrillion in derivatives, and then I took a look at the World Bank, and they said that there is 63 trillion in global GDP. These two numbers here are way off balance, and I see this as the biggest threat to the worldwide economy.
Yes, it's certainly. I mean, the figures are really quite staggering, aren't they? And various people on the internet have produced graphics of piles of $100 bills, and
yes, I've seen it. Yes,
it's sort of stretched from here to the moon or something.
Oh
absolutely
my God,
incredible.
yes.
Would you draw a distinction between the over-the-counter markets, such as I've just described, and derivatives markets, such as, the regulated derivatives such as futures, the CME and so on? What's your view about them? Is it any different from the unregulated derivatives?
Well, the unregulated derivatives are certainly more dangerous. However, I'm very skeptical of the CME and other markets like that. There's wide speculation that there is manipulation of the price of gold and silver in the futures markets. And again, that's why I hope that people do get into the physical gold and silver. I believe that when this disaster occurs, if it occurs, I should say, that those owning the real assets are going to be the ones who ultimately gain the most.
Yeah, so I think really what you're saying is that have a reasonable portfolio allocation in physical bullion.
Correct.
I mean, that would be certainly preferable, I think, is what you're implying, to speculative positions in the futures market.
Yes, absolutely. These are the games that they're playing. It's become a casino, and that does concern me as well, because a lot of honest people's money is at stake here with in the mutual fund industry and people who have their money controlled by others. That's part of the reason why this book is to sort of empower people to learn on their own. And when you go to see a financial advisor, you have some questions to ask them, and you got to make sure that they're being very safe with your money.
Yeah. Did the MF Global debacle create sort of very much? I mean, did it produce enormous losses for investors in Canada? I mean, it certainly had. I found absolutely surprising that customers' margin money wasn't protected at all. It was all commingled with the balance sheet, so far as we can see. What's the Canadian take on this?
Well, I'm not too sure necessarily on the Canadian side, but I know that at last I read was up to $1.6 billion has been lost in translation, let's say. So that money needs to be found, and if not, there are a lot of people who trusted a company and are now out of that money. Gerald Celente has been one outspoken individual who had a segregated account, and apparently they're not giving him his money back. So who knows how many more people out there, honest, good people who just, were investing in futures and had segregated accounts, and their money's now gone. How many other companies out there are doing the same thing? This is this is something we're going to find out over the next little while.
Yes, I agree. I think we haven't heard the end of that story yet, and quite frankly, I was absolutely horrified, because that sort of thing in this country, people will go to jail. It's actually as simple as that. So, I mean, it really does look like the regulatory scene for the regulated futures markets over there have actually failed the investors hugely. Well, David, I found this very interesting, and thank you very much indeed for taking time to speak to us.
Thank you.
Can I just remind our listeners that your website is themoneygps.com, and I think I'm right in saying you do have a pre-seed version of the book for free on that site, have you not?
That's right. I give away a 40-page version of my book. It's 40 pages condensed down, and that's available for free in PDF form. And if they do want to purchase the book, I do have a link on my website, but it is available on Amazon, and they could purchase it there. And I just want to make note that I use a lot of diagrams and charts to graphically explain to people, so it's not really too complicated for the beginner.
Right, so it's fairly digestible, unlike so many books we see nowadays.
Absolutely, yes.
Great. Well, David, thank you very much indeed, and I wish you every success with the book.
Thank you, I appreciate that.
Pleasure.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section.